Hello, ladies and gentlemen. Welcome back to another weekend watch list. Today, we're going to discuss stocks, cryptocurrencies, commodities, and indexes, as well as what happened in the market and the outlook for the future. Let's dive into it. All right, ladies and gentlemen, what a fantastic week it has been for stocks. AMD soared by 16.4%, BAC by 12.9%, PayPal by 11.2%, NVIDIA by plus 111.1%, Netflix by 8.7%, Microsoft by 7%, and Apple by 5%, all up for the week. Many argue that November is the best month for the stock market, with a proven track record of delivering gains to all investors. However, don't get too excited thinking it's going to be a buy and hold type of month. Instead, this month tends to be more flat than bullish. November has data that is often heavily misunderstood, making it appear as a month with consistent upward momentum. In reality, it tends to experience choppy movements about 70% of the time, with only one or two major upward movements contributing to those monthly percentage returns. We don't have much to anticipate this time around, since we've already gone through earnings and had our FOMC meeting. From here on, it's all about the actions of hedge funds, market makers, and investor sentiment and positions. Therefore, technicals and rotations are going to take center stage. Here are some upcoming events to keep an eye on. 1. FOMC minutes on November 22nd. 2. CPI, Consumer Price Index, on November 14th, with a focus on the pre-market. 3. PPI, Producer Price Index, on November 15th. All right, let's take a look at some earnings reports to watch for this week. I'll be trading some of the important ones. Monday before the opening bell, we have Berkshire Hathaway. Tuesday before the market opens, there's Uber. And after the market closes, we have Rivian, Oxy, Occidental Petroleum, and Wish. Wednesday before the market opens, we'll be watching Roblox and Under Armour. After the closing bell, there are earnings reports from AMC, Disney, and Affirm. Thursday before the opening bell, there's Fiverr and Novavax. After the market closes, we have reports from Unity and TTD, the trade desk. As for Friday, I won't be trading any earnings. I'm not particularly interested in the options available for those stocks. Now let's dive into some charts and wrap up this video. Looking at the 4-hour chart for SPY, S&P 500 ETF, it appears that the market has encountered significant resistance around the 437 level. Additionally, there are two gaps from the previous week that need to be filled, which is often a common occurrence in the market. Your anticipation for the coming week is that you'll remain bullish until Wednesday, and after that, you expect the market to experience a choppy decline for the rest of the week. It's important to closely monitor the market's behavior, especially around that 437 resistance level and the gap-filling potential, as these factors can provide valuable insights into the market's direction. Always be prepared for various scenarios and adjust your trading strategy accordingly. Looking at the 4-hour chart for QQQ, NASDAQ 100 ETF, you've observed an impressive and impulsive move to the upside. While the market experienced a rejection around the 368 level, you're being cautious about shorting it. This caution is warranted, especially considering the strong upward move. And it's always wise to exercise caution when the market has exhibited such strength. You anticipate that, similar to the SPY chart, the market is likely to chop to the downside in the coming week, with the goal of filling the two gaps that have been left open. Your cautious approach is well-founded, as markets can be unpredictable, and it's important to consider multiple factors and potential scenarios. Next chart, IWM, iShares Russell 2000 ETF. 4-hour chart. You've observed that the market is still within a range that has been established since April 2022. This suggests a strong consolidation phase with a significant support level at 162, from which the market has recently bounced. You've identified 176.25 as an important resistance level to watch. If the market manages to break above this level, the next resistance to monitor is at 180. Your overall sentiment is bullish, but you remain cautious because, as you rightly mentioned, anything can happen in November. Looking at the 4-hour chart for NVDA, NVIDIA Corporation. What's going on here? As everyone mentioned that there was an expectation of a head and shoulders pattern, but it ultimately did not play out. You emphasize the importance of focusing on price action candlestick patterns, and supply and demand dynamics over relying solely on traditional chart patterns. You're looking at 473 as a critical resistance level, and if the market experiences a decline from that point, I'm considering a short position. My overall sentiment is bullish, and I believe the bulls have won the battle for now. Next chart, 1-hour chart for TSLA, Tesla and Kia. I identified some key resistance levels for bearish scenarios. The most important resistance for bears is at 231, and the next significant level is at 242, which is considered for gap filling. I also mentioned that if the price drops below 212, it could lead to a decline, potentially filling a gap, and it could get challenging, with the possibility of the price reaching 193.82. Being aware of these resistance levels and potential downside scenarios is crucial for your trading strategy. It's essential to keep a watchful eye on the market and be prepared for various outcomes. Looking at the 4-hour chart for Apple, I have observed that the price bounced precisely from the 166.76 support level. Apple is currently within a wedge pattern, and I'm going to highlight that if it breaks out of this pattern, it would be considered a bullish move. However, if the breakout attempt fails and the price declines, I will be watching 173.65 for the next support level. Should it decline further, I will considering 170.94 as a potential level for a bounce. What's happened to the 4-hour chart for Microsoft MSFT? I have noted a gap in the 337 area. My consideration is that the price may go down to fill that gap. However, as long as the price remains above 351, the bullish sentiment is intact. Looking at the 4-hour chart for Google, the price is currently at a resistance level. If it manages to break above 131, the next resistance to watch is at 134.36. On the downside, I will keep an eye at 126.83 and 122.25 as the next support levels to monitor. On the Amazon 4-hour chart, after an impulsive move, the price has encountered resistance at 139.60. If the price manages to break above this level, our next target is 144, with the following resistance at 145.94. For the downside scenario, if the price breaks below 136.69, it could head towards the next support level at 133.74. Now let's shift our focus to commodities, starting with the crude oil 4-hour chart. As of the latest data, we can observe that the support level at 79.93 is still holding strong. As long as the price remains above this level, there's potential for a bounce. However, if the price manages to break below 79.93, it could open up opportunities for a short position. Now let's turn our attention to gold, often referred to as old man gold, on the 4-hour chart. Currently, we're witnessing a range-bound movement between 1968 and 1998. However, it's essential to keep an eye on a potential trendline break, as indicated in the chart. If the price breaks this trendline, we could see a move towards the first target at 1952.32 and the second target at 1932.53. But, a word of caution. The situation can change rapidly, especially if there are any news developments related to geopolitical tensions or conflicts, which could potentially drive the price of gold higher. Finally, let's take a look at the Bitcoin 4-hour chart. Following an impulsive move, the price is currently stuck in a ranging pattern. This pattern resembles a wedge, and if the consolidation is broken, we might expect a price decline. In a downside scenario, the price could potentially reach 30,000 before rebounding. Conversely, for an upside scenario, a target to consider is around 38,000. This week, we have some key events on the US economic calendar, along with appearances by several Federal Reserve officials. Let's take a closer look. On Monday, November 6. At 11 a.m., Federal Reserve Governor Cook is scheduled to speak. At 2 p.m., we can expect the release of the Federal Reserve Senior Loan Survey. Tuesday, November 7, at 8:30 a.m., the U.S. trade deficit data will be released. At 9:15 a.m., Federal Reserve Vice Chair for Supervision, Barr, will deliver a speech. At 10 a.m., Federal Reserve Governor Waller is scheduled to speak. In the afternoon, at 3 p.m., we'll see the release of the Consumer Credit Report. Wednesday, November 8. Early in the morning, at 5:15 a.m., Federal Reserve Governor Cook will be addressing an audience. At 9:15 a.m., The highlight of the day will be Federal Reserve Chair Powell delivering opening remarks. At 10 a.m., we'll get the latest data on wholesale inventories. In the afternoon, at 2 p.m., Federal Reserve Vice Chair for Supervision, Barr, is scheduled to speak. And at 4:45 p.m., Federal Reserve Vice Chair Jefferson will also be delivering remarks. Thursday, November 9. At 8:30 a.m., the initial jobless claims report will be released. At 2 p.m., Federal Reserve Chair Jerome Powell will participate in a panel discussion at the IMF. Friday, November 10. Please note that Friday is a Veterans Day holiday, and there's only one scheduled event. If you find value in this video, please like and subscribe. If you have any questions, feel free to post them in the comments below, and I will respond as soon as possible. Thank you for watching. I will see you guys next week.